sense of it. Here's the S&P 500 daily on the left, as always, and on the right is a 30-minute time frame. What we're looking at here on the left first is the daily with the declining 20-day moving average. That will continue to decline at least for the next 2 days as we get rid of this data. And the 50-day moving average, we're going to get rid of this data. So we're below the declining 50-day moving average. We're at the anchor from this prior low, and that's exactly where the sellers showed up this week. Coming into this week, we looked at this market and thought, where has it come from? As always, we want to say it's expended a lot of energy getting into this area. Where does it have the potential to go before it's likely to encounter supply? Now, it made it up through this level, but didn't hold above that level for the week. So going into next week, it paints a little bit more cautious picture here. The market is below the 5-day moving average, and that 5-day moving average is starting to flatten out. So the important levels that I'm looking at are the anchored volume weighted average price from this low here of the month and the month to date anchor. So if it comes into this zone, ideally I'd like to see that hold, and then it creates the higher low from which maybe a springboard could come and we continue to see some strength here.
So this is part of the problem with technical analysis is quite simply all you're doing is just putting lines, and then you react to the lines with after the fact analysis, saying how, oh look, there's supplies up here, it stops here, it goes down, and there's a potential buyers here, and then it's gonna go back up. Um, I mean, that's interesting concept, but it really doesn't help as far as how do you make money off of this? How do you trade? I mean, do you really just buy because it goes down to this level? No, I mean, that's not how I do things. Like I said on Friday, you can clearly see on Friday the reaction was right on the release of the consumer sentiment, which I knew was going to be a big market reactor. And if you look at the SPY, you're going to see exactly that the volume hit up, the volume started to go in, but it went negative. And if you don't see that results, you're going to miss out on a lot of what trading is about, because this number is extremely, extremely bad. I was expecting a higher number, and the reason why I was expecting a higher number, see if I could find the consumer sentiment. Um, consumer, no, it's a CPI. So I don't, yeah, the Michigan consumer expectation. You can see how it was holding above 65 for a while. And then this recent number comes out at 60 pretty much. So that is very, very negative. I was saying how if the number comes in slightly lower than expectation, and last month was 68, the forecast is 67. I was thinking if it comes in 67 or 66 and a half, that was going to be positive for the market. And rightfully so, because you can see how it went up on Thursday, and it gap up. Like I was saying, this is all because of the expectation of the consumer sentiment. Um, but it came in extremely low, which is very negative. And right away, they started selling off. But the other thing was these inflation numbers were higher, so much higher than expectation. Expectation was 3.2, and this 1 year inflation expectation came in at 3.8. A 5 year inflation expectation is 2.8, came in at 3.0. That is not a good number. So the market sold off, and it was a gradual sell off. So I got tricked. I was thinking, okay, the number is bad, but I was maintaining a bullish sentiment. The reason I was maintaining a bullish sentiment was really because I was thinking that this let me see if I can get this exactly correctly on the So here is the results, and it started going down, right? So I got tricked because I was expecting the 60-minute trend line to hold up, and the MACD, I was expecting it to start going upward um toward zero and then toward the positive side for next week. And the reason why I thought that is because this is a doji candle on the weekly to the positive side, and I was expecting this candle to be green. So I was expecting it is green, but I was expecting a bigger green for it to continue to power on upward toward the positive side. Well, technically that is the case, and technically it still points that way. And if you look at this technically as well, look at this. This looks green going toward zero, going toward the positive side, and it closed close to the 60-minute trend line. Right, there was a rebound at the very end. Somewhat, I guess. Not a lot, but somewhat of a rebound, going close to the 60-minute. Technically, it does look fairly positive, but it's not. I'm telling you, it is not. This is a negative picture right now. One, because the weekly is a doji toward the negative side. So this is a doji tail, this is a doji wick, where I guess the tail is in the upward direction, meaning there's a reversal. Anytime you have a doji, it means it reverse, and especially when the doji is at the end of the week, right? This doji was at the end of the week. This doji is at the end of the week, meaning Friday reversal, Friday reversal. Even though it's still green for the week, it is a negative indicator. This is a negative signal. Any way you deal with it, because the data is negative. The inflation number, let me see if that inflation number came in. Where is that inflation number? It may come in. I thought I had it, but PMI, job opening, payroll, CPI, and consumer sentiment. So maybe I didn't. Oh, here it is. Came in right here. Um, Came in at 3. So I don't. I mean, yeah. All of this has been somewhat negative. So it is higher than what it was last month, which is 2.7 or 2.8 was the actual. The expectation, you know, was around 2.8. So it comes in 3. Bottom line is these inflation numbers are coming in higher than expectation. Then consumer sentiment is low. So now you got lower consumer sentiment and higher inflation. But the Fed fund rates monitor tool is still at 93.8%, which is higher. The current probability is higher than it was last week. Previous week probability is 73%, previous day at 90, now it's 94. So it's essentially what it's saying is that the next meeting at November 1st, when it's November 1st, still a long way to come, especially with earnings already coming out here. So earnings is going to be positive, but next week earnings, there's not that many big names that are coming out. None of the Magnificent Sevens are coming out. They're coming out this week. So my expectation is next week it's gonna be a relatively down week, especially toward Monday, Tuesday, Wednesday at least, and then maybe it's gonna have some reversal. I need to look at the economic data and what else coming in, but right now the sentiment should be on the negative side. You should not be saying how it's a bear trap and it's going up, or draw any lines going up. I mean, this is gonna mislead people when you release out the information video over the weekend and say it's gonna go up. Any drawing saying it's gonna go up is gonna mislead people to think to buy, even though you're trying to base it both ways and say, oh, it's gonna go down here, it's gonna go up. that's not how just drawing lines and indicators and saying, oh, there's potential buyers at these significant levels is going to go up. It's going to confuse people. Okay. You gotta give an in-depth analysis and tell people exactly what's going to play out day by day and the reason why it's going to play out that way. And Friday is option expiration, right? I was watching this on Friday and I was saying they were not really buying into it. They were trying to get some kind of spark, right? So I got tricked out here. Um, Lost pretty much all my profit because I closed out my one of my straddle to hold toward the positive side because I was expecting an afternoon reversal to go up. That was what I was saying on the previous video. Well, it went reverse, so now I lost out on all that potential profit, and I lost profit on the other half of the straddle. The other thing was the VIX was going higher and higher, and that's why my straddle was losing money because I was selling the options, right? So this VIX right here is coming in positive. This is an indicator that something's going on. Okay. There is fear in the market right now. Potential. This is a precursor of potential fear, and fear leads to irrational behavior. And what these irrational behavior, like the shorts sees this and they're breaming at their teeth. Anybody who's trying to time this and buy in ahead, any positive movements and say, oh, I need to buy in because Brian Shannon indicates this line going up and I don't want to miss out, you're going to get burned badly because shorts, when they attack, they attack. Now, granted, it has been a bullish condition, you know, in like recent memory. Like all of this is really bullish. This powerfully bullish. Run back, looks like a potential they're gonna do another short squeeze. Maybe, but what what is there to lead me to believe that they're gonna engineer a short squeeze, right? Where's that data coming from? Well, the Fed fund rates expectation is 94, so obviously it's going higher and higher. But that meeting, we know this meeting potentially is going to be even more hawkish, which is negative. So potentially the Fed is going to be even more hawkish on this meeting, and they're going to indicate less cuts, or they're going to indicate more prolonged delay cuts, more prolonged of not cutting, which is biased negative, right? And it's biased negative because the economic data is showing, well, look, if the inflation continues to be high and the consumer sentiment, consumer expectation is going down, well, that's going to be lower economic activities, lower earnings, lower, GDP, lower whatever, going lower on the economic front. And if it's lower on the economic front, even though the Feds, they say follow the Feds. Yes, follow the Feds as far as interest rates. But if they're not cutting interest rates and the economic data is going the opposite direction, guess what? The market is going to go down. So there's a potential for the market to be really, really negative just because of this data that came out last week. Now, the data that's going to come out this week maybe is going to be different. I got to take a look at it. But here's the data for this week. And so I'm pretty sure, let me see, where is the economic data for this week, right? So this is Monday. Let me see, what was next week? Let's take a look at next week. Next week, you got Fed's meeting, retail sales, right? Is that going to be negative? It may be because consumer sentiment is negative. So now you got lower retail sales coming in. That's going to be forecast is 0.1 already. So they released the forecast already. So maybe this release of this forecast on the core retail sales with higher inflations. Granted, like the CPI, the job opening is high, but the PMI, or not the PMI, the CPI, the farm payroll, here, the CPI is going higher. The Michigan inflation number is going higher. So, now you got information that's saying higher inflation, lower economic activities, lower retail sales. This is very bearish. Overall, looking very bearish for next week. Building permits, this is going to be negative. So housing starts, this is going to be negative. So more bearish information. I hope I'm not missing anything in the economic data that's coming up or some developments. Internationally, you see more still tension in Russia is still ongoing. OPEC. Let me see what the oils are doing. But the 10-year actually went down a little bit. Well, but yeah, that's but let's see what oil is doing. Oil is going up, so that's also bad, right? So you got oil going up, potentially going to continue to go up. So what is it in the data coming in that is going to be positive? I just don't see it. Earnings coming out next week. So Monday, Charles Schwab's, nothing big. Bank of America, Goldman Sachs. They're not gonna be bad earnings, but they're also nothing. Abbott Labs is maybe another negative. Morgan Stanley, Financial, UNF. What do we got? Lamb Research. I don't know. Netflix. Tesla is coming out after the close on the 18th. Wow. So Tesla is coming out next week on the 18th. Is that correct? Let's take a look at Tesla. Tesla. Yes, it is. It is coming out on the 18th. It is coming out next week. And I think Microsoft will be coming out relatively soon too. Microsoft is coming out on the 24th. So the big one of the Magnificent Seven, and maybe Netflix is the other one, right? Netflix coming out on the 18th as well. So you got Netflix and you got Tesla. When is the 18th? So after the close on the 25th. So I would say the 24th, the 16th, I'm sorry. 16th, 17th, 18th start out negative. Then second half of 18th, reversal Wednesday. So my expectation, the way it looks like it should play out, is you should start seeing this going down more. What am I looking at? Oh, Jesus Christ. Yeah, so you should see this going down toward, and I want to see that trend line right here. So definitely it's going to test this 200-day moving average. So it's going to go down to this level. So Monday, Tuesday, Wednesday. So maybe even test this trend line. Monday, Tuesday, Wednesday, test this trend line, then go up. For Netflix and Tesla, I think Netflix, potentially, the thing is, the consumer might be doing bad. So if they're not shopping, because of inflation, they're not going out because of movies, high movie costs, they may be staying inside, and that probably means, staying inside, watching Netflix and other streaming services. So I don't see a reason why Netflix would not be doing well, or at least if they don't do well, at least forecast that they're going to be doing decent. Tesla should be doing decent. And the reason why is because this whole global warming situation is not fake. Okay, it's not fake. It is real. And people are going to be proactive and take action that they believe will help. Whether Tesla helps or not, I don't know. But the point is, people are going to take actions toward it. Investors, everybody believe Elon Musk and this green movement. So this premium on Tesla is all because of global warming, which I think is going to keep Tesla at a premium. So if, let's just say, if this goes down toward this level, potentially I may sell one put. Risky, right? Because you never know. It's not anything where you're projecting probability based on expectation of what you think is going to happen. You don't know. Something else might lead you to have that, to go the opposite direction because they may not be able to deliver. Their gross margin might be too high. There is a numerous amount of things that can happen that can cause Tesla to miss. The thing is, you know, maybe it's best just to wait for the yeah. A lot of time it's the opposite reaction, right? So a lot of time the initial number, boom, it hits down. So boom, it hits down, and then you're afraid to buy because the number comes out initially negative. The shorts initially hits, but then they delve into the number. Doesn't look that bad. Forward expectation, pretty decent, and it reversed all the way back up, and even so, and it gaps the next day all the way up here. You won't know that because you like. How do you know? You got to delve into that number, and then it's confusing to look at the number because you're not an expert at delving into these numbers and predicting what the traders and the investors are gonna do based on that number. And even if it reverses, you don't know if tomorrow is gonna gap down, right? The shorts might hit it again in the morning. So it's tricky, right? Playing earnings is not my expertise, although I do kind of see it happen and can kind of analyze what potentially can happen. I just can't tell you one way or the other if it's going to be up or down. But what I'm seeing right now does indicate to me, um, you know, and let's see what the futures are looking. So the futures already is pointing toward another test of this level Monday, and on the ES potentially is going to break that test and go down to this level and maybe even lower. So we have to see how it plays out on Monday. But I am leaning bearish now. MACD on the ES is going this way. Nasdaq still negative on the 4 hour. Let's see what it looks on the daily. Daily is going toward the negative, so potentially down to this level as well. I don't like the VIX is the other thing, right? That VIX is the first thing that really indicates to me that something is amiss. This is really what changing my mind from bullish to bearish. as far as like the next few days, and also that data that come out, I really did not like it. I should have trust the information given to me, um, and this is already. I should have trusted the information given to me, and like, gosh, and went negative. But it was like I said, I was having a positive sentiment on my last video, and you can never really know how the market is going to react. So you have to base thing on your base, analysis. Man, my base analysis was that consumer sentiment is going to be negative. It's going to go down. Eventually, it's going to reverse for next week. Well, guess what? It did try, then it fails. Stay low. That's negative, right? I believe the after hours. Yeah, the after hours also went down. So nothing to tell me that I should be bullish until the next catalyst point, which is the earnings of Tesla and Netflix. And if I'm wrong, trust me, if I can easily be wrong on that premise on Reversal Wednesday and Tesla tank, well, that's going to be a catastrophic sell off. It's just going to be boom, on the whole stock market. And it can go from bullish to bearish really, really fast. Really, really fast. And all these analysis that points potentially to going higher, it's gonna trap you in if you don't put stops. I mean, you can put stops anytime you put stops. Most likely, it's gonna get triggered anyway eventually if you don't take profits. But yeah,
to the end of the year. The NASDAQ found sellers right up against that trend line. And as we look at all of these things, the 20-day moving average, the 50-day moving average, the anchored volume weighted average price from that peak, they're all just levels of interest where we say, this is where we want to look to see if the buyers are slowing down and the sellers are taking control. They're not necessarily an action point. So we look at it and say, okay, we're at that level right here. That's this. Was there a reason to sell at that point? Not that I could see. Now, of course, we since then have made a pattern of lower highs and lower lows right here, and we're below the 5-day moving average. So next week, I would expect a little bit more consolidation, perhaps down in towards this zone. Maybe we run into the anchor off of.
so what was that trigger point? I forget. Oh, that trigger point was the oh, what was it? It was this failure to break out. That was the trigger point. And I think the economic data that came with it, there was something that came with it um of last week. What was this on Thursday? I forget what it was, but there was something that triggered me to think. And let me see. 10 to 14th. Apply. Was there something that caused me PPI? Oh, the CPI. Was that on Thursday? Yes, it was. Oh, God, it's like, jeez, my memory so bad. Yes, the CPI was really bad. That was the trigger point. And I was expecting the CPI to be negative, I remember, and that it was gonna be positive. So that's why I was leaning bullish. Um, because and the Fed fund rates continue to go higher in the probability of no rate cuts. But that CPI was but then I also thought the consumer sentiment was going to help. Well, guess what? They already know, right? They knew in advance, or some people know in advance at least, right? Thursday CPI. Yeah, it was kind of confusing. That's why it's so like none of this really even matter. Like this is all just manipulation because the pre-market, the CPI, the release of the CPI, it was gonna gap down, then it went all the way back up, then it started going down, but it started going back up, tested this. So the traders, the algorithm went in and tested it, but I held into the conviction. I held onto the conviction that it was gonna go down on this on the because of the results of the CPI. This reversal right here was what really triggered me to balance out my straddle. So I had a negative position I was holding. Then when it reversed, I balanced out the straddle. But guess what? It went up. I should have closed out that straddle. Uh, but again, I don't know why. I was thinking eventually it was going to reverse and I could close out the straddle that I held. But that counter straddle, I closed out here, but then I held onto the straddle that was from here, and oh no, the straddle that went from here, I sold here. The counter straddle, I had to close at the end and then end out with no profit. Yeah, yeah, just bad execution. I mean, it's gonna happen. You're gonna make mistakes, and in hindsight, you see it so clearly, right? But you know what? Overall, if you do your due diligence, if you look at the data, if you analyze it, if you understand it, and and as long as you don't miss something, and if you miss something, you go back and analyze why you miss it, you're gonna go out ahead more time than not. That's the point. That's the point of our forward-looking analysis. And I'll continue to do these videos mainly for myself because my memory is bad and I forget things. So I need to go back and I look at the videos and I'll say, how did you keep forgetting when it's right there? I mean, the information is right there. But that is the reason why it went down. It was the CPI. It's clearly why it went down. It's the CPI.
This low, and then that gets this 20-day moving average kind of flattened out. And then the 50-day moving average will start to rise as well. So I think the bullish scenario is we do something like this, and then mid to late next week we start to rally once again. It's looking like it.
No, it's not. That's not gonna happen. This reversal is gonna come on Tesla, Netflix, on after hours. It's gonna sell off on Monday, Tuesday, and I don't know what happened gonna be on Wednesday, but Monday, Tuesday, it's gonna sell off. Um, that's how sure I am. I mean, unless there's something I'm missing. I mean, buyers are not gonna just buy because they want to buy. There's got to be a reason to buy. And this VIX is always telling me that why would buyers just come in and buy? Well, what is the reason? This is always telling me that yeah, it wants to go up. There's fear, and when there's fear, the shorts can easily attack, and the longs, the bulls, can easily just get afraid and just start selling. Click the panic button, sell, sell, sell. This VIX gonna start going really high. There's a pretty good chance of a decent pullback Monday, Tuesday, because I don't unless there's some trigger point. Buyers do not just buy because they buy because of lines on some
Has that
technical
potential to
indicator.
do so. I'm not ready to be a buyer yet because again, on the shorter term time frame, the pattern here is we have this high, we have a lower high, we have another lower high, we have this low, and we have a lower low. So I don't want to buy the pullbacks. I want to buy strength after the pullback. Russell 2000 has told us.
So yeah, I don't know, nothing useful from his analysis other than those lines, which are potential lines of reactions.
But is it all just going to be a bear trap? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open. We were down 0.5%, and on Thursday I told you if you went over to the hourly chart on SPY, there was this double top rejection from SPY 437, and we did get confirmation of the break below the neckline, which told us we were likely going down to SPY 430, And on Friday, that is exactly what we did. So if you don't believe technical analysis works, this is a textbook technical pattern when you
I
get
didn't. I remember this guy. I do remember he was saying how it was gonna go up, right? Because I clearly remember on this last video he says it's gonna bounce at this and then go up. And I was saying, no, that's not how it works, okay? And I'm gonna now he says here the reason these are all after the fact analysis.
a double top and break below the neckline, you go the full measured move, and that was picture perfect double topping price action on the SPY hourly chart, which means that short trade, which was a low risk short entry, which I talked about on Thursday, is now complete. And there is a very good chance, if you think SPY is going too much lower, that you will get bear trapped here. So first thing, if we just look at the daily chart, it looks like that we were selling off on very high volume, but I will talk about volume in detail, especially when we look at the Dow Jones today. So if you want to get more information on the analysis across the board, action. So first of all, if you just look at the daily chart, it looks like a very bearish candle on high volume. But if you look at the hourly chart, it was a textbook double top pullback from a double top price target that reached the price target on Friday. And then once we reached the price target, we started to see very high volume buying. And we also had very high volume buying in the beginning of the morning.
This buying right here is the end of the day zero DTE, 0 day to expiration options. That's just how it works on a Friday. It means absolutely nothing. Absolutely nothing.
So there was a lot of volume actually pushing prices higher. And then during the pullback, we were getting very low volume on the pullback, which tells us that the buyers are more motivated than the sellers. And if you simply just look at the daily chart and the daily volume and the daily candle, you do not get that full picture that there was a hell of a lot of buyers on Friday. So we've been talking about needing a pullback, and we've been talking.
Let's look at the buyers. Maybe I am missing something. So 16th, let's take a look at the buyers and see if there's anything that maybe I am missing. So okay, this guy, and that's not too strong. Let me look at this guy. Buying, yeah, there's some buying, and then on the put side, there's some buying on the put sides too. So I don't know what to tell you. 18th, 19th. I think that's the Friday, right? Thursday, 20. Yeah. Yeah. This has some volume right here. 72. And then this got 66. This got, there's something going on here. There is something going on here. I'm not exactly sure. But it's hard to read. But there's nothing that tells me that the buyers are so much stronger than the sellers. And I'm telling you, this VIX right here is what it's telling me it's probably
about
going
needing
down.
a higher low, and now that is exactly what we are getting. As long as we can hold this support right around SPY 430 and then start to bounce out of this hole, I think there's a very good chance SPY is going to 440. And then if we can break through the 440.
So yes, I do agree with this, even though he's just drawing lines. I do think potentially this is where Tesla and Netflix is going to release the earnings after hours. And that's going to spark the reversal because the rate monitor is still very high, and the Fed's meetings isn't until another 2 weeks from now, 3 weeks from now, November 1st, and you're gonna have Microsoft, you're gonna have I think Meta and Google releasing earnings here, Tesla and Netflix here. So yes, so initial sell off 16, 17, 18, then Tesla, Netflix, and the rest of the earnings are gonna be decent. Now I need to look at the economic data for this week, but just knowing that Microsoft, Google, and Microsoft, Google, and Meta, Facebook are gonna release earnings during this week is gonna be a positive sentiment. Then yes, he's gonna be correct in this analysis.
40s, we're likely going all the way up here through the gap fills at 448 and 455. So bigger picture, I still think quarter 4 is going to be a bull rally, but as I've said before, nothing moves in a straight line, which means we will need higher lows before we get those higher highs along the way. So watch.
Okay, I guess this is good enough for now.